Hi students, this is our fifth session regarding income from capital gain. In the previous session, we have discussed about the meaning of capital asset, meaning of capital gains, types of capital asset, types of capital gain, how to compute the short-term capital gain and long-term capital gain, and meaning of different items given inside the computation table. So in this class, I am going to start with the previous one slide which I have already shown in the fourth session, that is method of computation of capital gain. And this table is very important. Why? Because on this basis of this table only we are going to solve the sums, all the sums. So first, for computation of short-term capital gain and long-term capital gain, we have to write the sales consideration or sales value. From sale value we have to reduce the expense of transfer. We will get net sale consideration. From there we have to reduce cost of acquisition in the case of short-term capital gain and indexed cost of acquisition in the case of long-term capital gain. Likewise, we have to reduce cost of improvement for short-term capital gain and indexed cost of improvement for long-term capital gain. You will get short-term capital gain and long-term capital gain as answer. From that we have to reduce some exemption that we will discuss in the later classes. So once you deduct short-term capital gain or long-term capital gain from exemption, you will get taxable short-term capital gain or taxable long-term capital gain. In this class, I am going to give more stress for indexation in this indexation. So we are going to discuss here what is indexation and how we are going to compute the indexation. Okay. So an indexation is applicable only for long-term capital gain. That should be noted. Indexation is applicable only for long-term capital gain and not for short-term capital gain. And remember, it is a benefit. Indexation is a benefit given to the assessee by the income tax department for reducing the tax. So how it is going to reduce the tax? The cost of acquisition or cost of improvement is going to get adjusted according to the cost of inflation in the country by using what? CII, that is cost inflation index. So this is a table of cost inflation index. It started from the year 2000. It started from the year 2001-2. Okay, that is assessment year 2002-3. The cost of inflation index start from 100. Then second year, by considering the inflation index, it became 105, 109, 113, like that. You need not by heart this, but you must understand it. That's all. Here you can see 24-25. That is our previous year. Okay, here it is 25-26. It is not 25-25. It is 25-26. It is 363. So this table they will give in the question. These values and all, this year, this value, they will give in the question. That you need not get worried. So how we will calculate the index cost of acquisition? Can you see this slide? 1, 2. Likewise 3, 4, 5. Then we will look into the example regarding it. So cost of indexation, index cost of indexation for calculation, there arise 5 cases. Understood? So you have to read the question carefully. Then you have to apply the formula. Now we will see the first case. I told it is a normal case. The normal case, how you will calculate index cost of acquisition? The formula is cost of acquisition. What is the value the assessee paid for that asset into 363. 363 is nothing but this 24, 25, 363 is there, no? This value. This value, can you see here? See this value? That value 363. This value. This will be constant. Okay, 24, 25 value divided by CII of the year of purchase. When we are purchasing that year, CII we have to consider. That is a normal formula. Index cost of acquisition is equal to cost of acquisition value into CII of the previous year, that is 363, divided by CII of the year of purchase. We will look into one example for this. Altogether, if I teach, it will be tough for you. Let me give you one example for it. Okay. This example 1, normal case. See, the purchase cost is 2 lakh. Purchase cost, how much it is given? 2 lakh. Which year they purchased? 2004-5. What is the CII of 2004-5? 113. We will look into the table. CII of 2004-5. 2004-5, here you can see 2004-5, 113. That value they have written, that's all. It will be given in the question. CII of the year of purchase they will give in the question. The formula, index cost of acquisition is equal to, what is the formula? Cost of acquisition. Cost of acquisition, how much in the question? The cost of acquisition is purchase cost 2 lakh into 363, that is CII of the previous year, divided by 113. So the indexed cost of acquisition became 6,42,478. So instead of cost of acquisition, instead of writing 2 lakh, by taking into consideration the inflation, we are writing 6,42,468. So the cost of acquisition has increased. Cost of acquisition, what we will do actually, we have to reduce it, right? Cost of index cost of acquisition we have to reduce. So what will happen? Automatically the long-term capital gain will also reduce. So the tax payable on long-term capital gain will also reduce. That is a logic behind this indexation. I hope it is clear. Case 1, normal case. I told you the formula with example. We will look into the second case. What is the second case? If the asset is acquired before 1/4/2001. Here you can see the CII start in the year 2001-2, right? So that is why formula, if the asset is acquired, if you purchase asset before 2001, what is the way in which we have to calculate the index cost of acquisition? Index cost of acquisition is equal to actual cost or fair market value as on 1/4/2001, whichever is higher we have to take, into 363 divided by CII of the year 2001-2. CII of the year 2001-2, that is a base year. Before that there was no CII, no. That's why 2001 is treated as the base year. So we will look into one sum. This is example 2. The property purchased before 1/4/2001. Just an example we will see. The actual cost of the property is 8,000. When it is purchased? 98-99. That means it is purchased before 2001. They will give in the question, the fair market value as on 1/4/2001 is 3 lakh. For the same property, his purchase cost is 80,000, but in 2001, what was its value? 3 lakh. So, how you will calculate indexed cost of acquisition? Index cost of acquisition is equal to, now only we have looked into the formula, actual cost or fair market value as on 1/4/2001, whichever is higher. Here you see 80,000 or 3 lakh, whichever is higher, 3 lakh. 3 lakh into 363, that is our previous year CII, divided by the base year. It started in 2001 only. So, it should be 100. So, 3 lakh into 363 divided by 100 is equal to 10,89,000. So, the value in 2001 is 3 lakh. It may be